Now, I will get to the Rosenstein issue in a moment. Not clear exactly where he stands at this point, but he's very much in the news. Is he resigning or is he being fired? That has had some input on the stock market, but certainly not much. We're down 140 points. We were down 130 when the Rosenstein news came out. But look at this. Our next guest says the midterm elections won't affect the market. Bob Dole is with us, Nuveen, Chief Equity Strategist. This is a big call, Bob. Are you saying that if the Democrats retake the House of Representatives, it will not hurt this bull market?
I don't believe so, Stuart. I don't think that the Democrats in the House can stop the momentum of our economy. The fact that the executive controls regulations and this president is creating fewer new ones and trying to roll back some old ones, they're the reasons the bull market's been in gear, along with behaved inflation and interest rates. And I think Democrat or Republican House, not going to matter. If the Democrats take both houses of Congress, we better talk again.
Okay. Now, China, they canceled trade talks that were due this week on these tariffs. And today, we imposed tariffs that went into effect on Chinese goods coming here. But again, this seems to have had very little effect on the stock market. Is it another case of, despite it all, the market looks only at fundamentals, and that's it?
Well, certainly the fundamentals come first and foremost, Stuart, but these trade issues, unlike who takes the House, are important. Look, the market kind of looked through it on Friday, and we had a nice up day. Maybe over the weekend, the market's rethinking as China's backed off willingness to have those talks. Again, I think we'll make it through from an economic standpoint, regardless of the trade issues, but markets fear how high will the barriers go? How long will this potential trade war last? Remember, nobody wins in a trade war. Everybody gets black eyes.
You know, this economy must be really, really strong, and profits must continue to keep growing, because that's the only explanation for a market that continues to rally in the face of some, I mean, really negative political news.
It is certainly a powerful reason, and I think that's the case. As you know, Stuart, we witnessed 25% S&P 500 per share earnings growth in the first half. We're likely to see something on the order of 20% in the second half. They're amazing numbers this far into an economic cycle.
Have you ever seen profit growth like that before?
Only off a recession-depressed low. But this far into a cycle, no. And it's the tax bill. It's amazing revenue growth. It's improved profit margins. It's corporations having some confidence to move forward. So we're seeing capital expenditures improve. We're seeing productivity get a bit better. And all of this has been bullish.
What about consumer sentiment? That's at, I think, a multi-decade high. Is that a big factor when you're analyzing the market, consumer sentiment, confidence?
No question. If I'm a consumer, I'm more likely to be working than I was a couple of years ago. My salary's probably up a little bit. We've seen the savings rate remain reasonably firm, and so I've got some money to spend. And if I'm pretty confident about I'm going to keep this job and get another raise down the line, I'm going to spend some money. So consumer confidence is absolutely key. Business confidence, consumer confidence, both of those, Stuart, and they're registering pretty strong numbers.
Now, this is the last week of, I think it's the last week of the third quarter, the economic third quarter of the year. Now, we don't get the numbers on growth yet, but when we do get them, are you expecting at least 4% growth in this quarter that we're now in?
At least 3.5. Could we have a 4 handle again as we did in the second quarter? Not out of the question. Anything 3.5, 4, there's just amazing numbers for an economy that's as big and mature as the United States.
You're really bullish, aren't you?
Bullish about the economy. The stock market does have some headwinds. The trade issue, modestly rising interest rates and inflation, that keeps a lid on. So stocks are not up as much as earnings, which means valuations have been compressed somewhat, and they're the reason, Stuart.
Again, I'm going to go back to the same question. I've known you for 30 years, Bob. Have you ever seen anything like this before?
It's pretty amazing, Stuart. As you know, the longest bull market in history. Next June will be the longest business cycle in U.S. history. Amazing.
Got it. Bob Dole, Thanks for joining us, as always. You've calmed us down, Bob, and we appreciate that. Thank you very much indeed.
Thank you.
Okay. A couple of stocks to look at, some ideas here. Sirius XM, they're going to buy Pandora. It's a $3.5 billion stock deal. This will effectively create the world's largest audio entertainment company. Sirius down a fraction, Pandora up a little. Look at Comcast. It beat out Fox in the battle for Sky Broadcasting. They bid $38.8 billion. That's the winning bid. Fox is the parent of this network. Comcast is down 7%. Maybe they overpaid. Some people think that. 21st Century Fox is up 50 cents. That's 1%. Gold giant Barrick will buy its rival, Rand Gold. They're getting together. It's an all-stock deal. London investment firm Panmure Gordon says this is a case of two drunks supporting each other, rather than a deal based on strength and merit. Well, Barrick is up nearly 6%, and Rand Gold is up 7%. A couple of drunks right there. How about Bitcoin? What's that doing? Same old, $6,600 per coin. All right, now to the great exodus, the tax exodus, I should say. Why buy an expensive home in high-tax New York when you can move to zero-income tax state like Florida? Coming up, a New Yorker turned Floridian real estate developer. He sees a ton of people moving south, and he says they are tax refugees. That's what they are. New numbers show arrests at the US-Mexico border once again on the rise, and the cost of illegal immigration falling on you, the taxpayer. Former acting ICE Director Thomas Homan coming up later on that one. And we're on the breaking news from Washington. Deputy Attorney General Rod Rosenstein has reportedly resigned. He's reportedly at the White House right now. His exact status, not known at this point. President Trump on the world stage. He'll address the UN General Assembly tomorrow. We're following all the news and your money. The third hour of, well, we're just getting started on the third hour. Stay with us.
All right. Markets abhor uncertainty. This is another element of uncertainty added to the widening allegations against Brett Kavanaugh. Another uncertainty added to the trade war, which seems to have escalated a little bit with some nasty comments overnight. And, of course, the implementation formally of those tariffs on $200 billion worth of Chinese goods, $60 billion plus of similar tariffs on American goods that affect 5,000 different items and could result in much higher toy prices, for example, going into the Christmas shopping season. So you can weigh on all of these concerns and doubts and unknowns. And, of course, the better part of valor is to sell off. Let's get the read from Charlie Gasparino. We also have radio show host extraordinaire Ben Kissel. We've got American Support Prosperity President Tim Phillips, Payne Capital Management Senior Wealth Advisor Michelle McKinnon. Michelle, and would you begin with you? Then it's open season here, guys. You could make the argument that it would be very bad for Donald Trump to see Rosenstein go.
I mean, you can make that argument in so many other different cases. I think it's a lot of noise. I mean, the market's down 200 points today. The market could be down 200 points because of China, because of a lot of other reasons. So I think it's really too early to say. But I didn't ask about the market. I
asked about it would be a mistake for the president to do this because better to have him with you than outside showing pot shots at you.
Yeah, and to create more uncertainty. But, I mean, Trump's been uncertain and unorthodox since day one, so this is not new news. So, I don't know. I think it's hard to try to claim that and guess that one.
What do you think, Tim?
I think the bigger issue is the trade issue. Neil, when you look at the potential to undermine what is becoming a booming recovery, partly because of the tax cuts and tax reform that this president fought so hard for, the deregulatory effort that's knocking down barriers to opportunity. We're seeing an economy taking off like we haven't seen in over a decade, and they're risking undermining all that with this trade war. I think that's a bigger issue. I think Michelle's right. Most Americans are not looking at is the Deputy Attorney General of the Justice Department going to get fired. Most Americans, that's noise for them. They want to know, is this economy, consumer confidence at almost 2-decade high, is that going to continue going? I think that's the bigger issue and the bigger danger here for this president.
Well, I mean, I think the economy, it's just a matter of time before it starts going on the downward trajectory. Of course, Ben Bernanke disagreed with the tax cuts, saying you don't want to overstimulate the economy. He thought that might have been a major mistake. So we'll see how that plays out.
Nostradamus on this.
Yeah,
it did have a good effect.
Yeah,
his name is Ben. We got to trust him. But when it comes to Rosenstein, I think the biggest favor he could give Trump is resigning. That was the rumors this morning that he was going to resign.
By the way, is there a difference in his resigning rather than getting fired? Someone told me it makes a difference in the appointment. Right?
Well, that's a good question. In the appointment,
well replacement?
I don't know about that. I mean, I think it's an optical thing if he resigns.
Of course,
but
yeah.
if he resigns under pressure, it's called being ousted, which is almost the same thing.
Right.
I will say this. The economy looks good on paper. The wages are essentially flat from Obama years. Consumer confidence is up, but there's a lot of there's underemployment still pretty high. This is not the Bill Clinton economy. Meaning, when Bill Clinton, I mean, I was at the Wall Street Journal at the time covering Wall Street, and I remember that's when the political situation was pretty hot and heavy with Lewinsky and Whitewater.
And they didn't want him to go. Wall Street didn't want him to go.
And the general public didn't want him to go because the general public was dealing with 5% economic growth and rising wages and massive employment. We don't quite have that here. As much as we want to tout the GDP numbers, we don't have that here. And so if you mix that with general uncertainty politically, and here's where I worry about markets. Let's just say the Democrats get the House and the Senate. Let's just say that they delay Kavanaugh enough for a Democratic Senate. Well, then all bets are off on this thing. And then you have some real problems.
Well,
and I think that's the problem.
Would be on not confirming Kavanaugh at that point. If you had
well, I'm just saying
you're
that.
a betting man.
I'm just saying.
Well, you could argue after an election like that, you have until January to get your guy in. I mean, you want to force.
I think the real question is for Trump is the discord, and we haven't seen this type of discord since Clinton, and this might be even more.
I do.
Some of itself. Let's just make this point. If you does this translate into Democrats taking over everything? And it's a good case. It might.
Well, we always talk about a Wall Street board's uncertainty, and in this uncertain environment, we don't know all the names are good. So
it doesn't matter for a Democratic Senate.
I think at the end of the day, as long as look at the fundamentals, right? You have historically low unemployment rate. You have record-breaking earnings.
No, but if you
politics are politics.
If you got a change in fiscal policy spurred by Democrats controlling every major committee,
but I don't think that the Democrats are really in the ball game when it comes to taking over the Senate. That doesn't
really. You never know.
No, there's Democrats that are in Trump.
But if that would happen, all bets really would be off.
Of course, but that's extremely difficult.
No, it's not. They don't have to. They don't have to vote against Kavanaugh now.
Your Clinton
Joe Manchin can vote
good...
against Kavanaugh.
Well, they have cover. These Democrats
they all have cover right now.
Your Clinton analogy is an interesting one, and just getting back to the danger of this trade war, this is so easy to overlook. Remember what happened early during that administration? The North American Free Trade Agreement came, and it transformed the American economy in a good way. Millions of jobs resulted, prosperity, lower consumer prices for Americans on everyday items, which helped folks struggling on the margins. This trade war, it's easy to overlook, and it's so important. It's central to this economic recovery, and it is early. I completely agree with that. That's why it's so fragile right now. And with all the Rosenstein stuff and everything else, it's easy to overlook the danger of this trade war.